All right, in today's video, I'm going to take another look at the currencies, maybe what might play out in the next week or two. As I've said, that this is not going to be an easy process of the dollar rolling over. Other foreign central banks are going to try to weaken their currency and prop up the dollar. Just one way to offset the effects of um, trade deals that might not be or may be a bit disadvantageous to them. If they can keep their currency weak, they can offset those trade negotiations to some extent. So I don't think the dollar is just going to roll over and die here. So we've got a potential support zone here right at the 200-day moving average. And this daily cycle is getting pretty mature. So it's going to be due for a bounce naturally anyway. And I suspect this 200-day moving average is going to be used as added support to try and prop the dollar back up and weaken the euro, weaken the yen, weaken the Chinese yuan, and so on. And it may even turn out that they can manufacture an early intermediate cycle low. Realistically, we should get a bounce and then another leg down, maybe another leg after that, because 17 weeks is really, it's probably too short for a normal intermediate cycle low. But they may be able to manufacture one and prop this back up, maybe even take it back up, near these highs again. Like I said, this is just not going to be an easy topping process. Foreign central banks are going to fight this tooth and nail, but I think eventually they're going to lose the battle, and the dollar is going to roll over in earnest. But short term, I would be wary that this may play out, that we could get a strong bounce off this 200-day moving average. Moving on to the longer term charts, you can see if we were still in a bull market, there's really just no excuse for the dollar dropping this far below the 200-week moving average. That was the warning sign that something was wrong, and the bull market was either in jeopardy or over. I think it's probably over. And now you can see we've just got an ongoing battle here, trying to regain it, losing it, regaining it, losing it. You can see where the 200-week moving average is starting to flatten out and actually starting to roll over. That confirms to me that we're in a bear market, but we've probably got another run back above this yet. They're going to keep fighting against this weaker dollar. So this is still going to remain difficult probably for several more months, but ultimately this is going to fail, and the dollar is going to come down, take out this low, and confirm, that the 3-year cycle here has topped and rolled over in a left translated pattern. And in the euro, you can kind of see the same thing. It's again, if the euro was still in a bear market, there's really no excuse for it pushing this far above the 200-week moving average. And you can see it's finding support every time it comes down to here. And the 200 is turned and is starting to move up. But the ECB is probably going to try very hard to weaken the euro against the dollar, and we may very well have to come back down and test this again before we really start to get any traction to the upside. Kind of the same picture with the yen. We're getting multiple moves back and forth along the 200-week moving average, and the average is starting to turn back up. But again, I wouldn't rule out the possibility of another move back down to test this average from the top side one more time before we can really start getting some traction to the upside. And then finally, moving to gold, I keep telling people you need to be cautious with the metals right now. It's late in the cycle. At least get unleveraged, move to unleveraged ETFs or mining stocks. You don't want to be triple leveraged at this point. It's just too late. This intermediate rally is, I think this is week 18. That's just too mature to be heavily leveraged. You got to control greed right now. If the dollar does bounce, if they do create a slightly premature intermediate cycle low and we bounce back up and test those highs again, then it's not inconceivable that gold could come back down and retest this 200 week moving average from the top again before we really start to get out of this nasty consolidation that we've been in for a couple of years now. So, again, just this is the time to control greed. You don't want to be heavily leveraged right now. Um, at the very least, just go to unleveraged funds so that if we do have to come back down and test this from the top one more time, you're not going to take a leveraged drawdown. At least the drawdown will be manageable if you're unleveraged at this point.